Now let's welcome our guests for a bit of a chat about currencies. Chris Gore from GoMarkets in Melbourne. We've got Carson Scott with me here in studio in Sydney, and Jim Brondas from Forex in Sydney. Good morning to all of you, and can I just start with you, Chris Gore from GoMarkets. Interesting to see over the weekend that the greenback showed early signs of maybe regaining that safe haven status. Are we seeing a reversal of the US dollar trend, do you think?
Well, yeah, as you mentioned, on Friday's trade, we did see some early signs there. Recently, what's been happening is less than convincing economic data from the European region and the States, for that matter, has translated to negative things for the US dollar. So traditionally, the US dollar is seen as a bit of a safety play, and we've seen that theme once again pick up on Friday's trade. So also, we're seeing the US dollar show significant oversold signals. So we are seeing that if you have a look at the US dollar index, it's showing at levels around about 30 on the relative strength index, and that to me suggests an imminent reversal. But however, it doesn't necessarily mean as such. If we see some positive things in the US market this week, we could very well see the usual dollar weakness, high yielding currency strength.
Can we ask you as well, Jim Brondas from Forex, are we seeing a reversal for the US dollar?
Yeah, against most major currencies, yes. Obviously, against the yen, there's been a little bit of a difference. It's trading at the lowest levels we've seen since December last year, at below 87. So, against the euro, against the Aussie and commodity-based currencies, yes, we have seen a bit of a reversal, and we are of the view that this could be the beginning of a little bit more, I guess, upside in the US dollar against those currencies.
How important, Jim, did you take those remarks from China's premier when coming out over the weekend saying, look, that Europe would remain a key investment destination for China? It did seem to sort of really put a floor under any euro declines.
Yeah, obviously the pace of the losses on the euro weren't as great as one would have imagined, given the backdrop of what happened, I guess, with that US data and on equity markets. So that is of some importance. Obviously, the world's looking very closely at global economic growth at the moment, with the China data we saw last week and the comments from the US Fed and the outlook for European economic growth. It doesn't look too good in terms of global growth.
Just on the euro, Chris Gore from GoMarkets, how is the euro going to get any momentum out of the bank stress test coming up? If they're too good and they say all the banks are fine and thanks, let's move forward on this one, then people are going to question the credibility of the stress test. If they're too bad, then everyone's going to panic. How's the euro going to get momentum out of this?
Well, it's a very tough question. I think the stress tests, seemingly by their very design, seem like that they will produce some positive results. And we know that European officials are all too aware that of the importance that these may bring for confidence in the market, and they are relying on this to I suppose bring down the cost of funding and for these European banks. It's a very tough one. I was reading an article on the weekend which suggested the old adage of sunlight is the best disinfectant, and that rang true to me. But however, this doesn't necessarily, this transparency doesn't necessarily mean that it's all smooth sailing from here on. It's the finer points of these stress tests that investors are going to be looking at, and that'll be the market mover. There's no guaranteed upside for the euro.
Well, Chris, how much sunlight is Bernanke going to shed on the state of the US economy? Is he going to say that the current weakness is temporary? Is that going to be the greenback boost that the markets are waiting for, or will he not be quite that bullish?
I don't necessarily think he'll be quite that bullish. I mean, what we're seeing, I think cautious optimism will still prevail in the Fed's language, and we've seen that the whole way through. I'd suggest that what we're probably seeing is a continuance of the theme the minutes last week brought out, which effectively showed that economic conditions in the States are slowing, and even they mentioned the deflationary word, which is not a good thing at this time.
Well, you can't be cautiously optimistic in the face of an ailing housing market, which is going to be the key set of data prints this week. What will he have to do if that data is still in the doldrums?
Well, the very first thing that comes to mind is stimulus. I mean, that's also a topic of discussion. So we may very well see this become a theme in the next week, where people bring up the whole stimulus factor. We know that recently tax credits for housing has expired. This is the bane of the US economy's existence, and this is what they'll want to do to maybe push things along and add some steam behind it.
But that will certainly take a head of steam out of the greenback, right? That'll be a trigger for selling.
Well, yeah. I mean, you would think so at first glance. I mean, I think going forward, the greenback's appeal is going to be that of as a safety currency, just like we have in recent times. There's not a lot in the US economy that, in terms of positive things, which are going to push the greenback up in the near term. We have deflationary concerns and interest rates that are expected to remain at for an extended period, at record lows for an extended period. And it doesn't seem like the language is going to change. Although there is some division of that language changing, it doesn't seem like it in the near term, that's for sure.
Jim Rondas from Forex. What does Bernanke have to say to see the US dollar under pressure? I mean, we're talking about quantitative easing there with Chris Gore from GoMarkets. What could we expect if that was the case?
Well, I think the US dollar is going to, regardless of the comments that come out, definitely in the first half of this week, we still think the US dollar is going to, I guess, remain relatively well bid against most currencies except the yen. I think the overriding factor will continue to be that risk appetite. Bernanke comes out and talks about the possibility of more stimulus, and that could change things, but we're of the view that it's probably unlikely that we're going to get any comments along that line, and they'll probably push forward the continued mantra of lower rates for longer.
So do you think that if we won't get much out of Bernanke, what about Bank of Canada then? Will we get more out of Bank of Canada? Would that be more likely to move markets?
There's a chance, yes, I think so. Seemingly, since they raised rates last time round, that the market will be watching that a lot closer. I mean, Bernanke will be talking about the US economy and, I guess, a slower than expected rebound in jobs and the problems with the housing market at the moment that you mentioned there. But in terms of Canada, I think it's a totally different story. So we think that US dollar CAD will remain relatively stable around these levels as they kind of counteract each other.
Both of you have kind of by various ways talked of the yen as being this go-to currency, you know, alongside arguably the US dollar, although I'd argue that perhaps that thematic's changing at the yen as the go-to place really front and centre. What do Japanese authorities, my question to you, do in this environment with an appreciating yen? That's surely a deflationary signal. That's the last thing they want when it comes to tackling a deficit, to have their exporters losing that sort of ground, that competitive advantage.
Yes, that's right. I mean, obviously, the Japan economy has been in this predicament for a very long time, and there have been plenty of ideas thrown at it over the last 10 to 20 years, and nothing seems to have worked at this stage. Obviously, talk of tightening the belt and increasing taxes is not going to do the trick. It's more about stimulating growth domestically within Japan, which has been a problem for such a long time. In this environment where the rest of the world's also slowing, it's going to be pretty hard for any sort of any external growth factors to kind of kick into the Japanese economy. So at this stage, we think it's going to have to be more spending within Japan, within its own borders, to kind of stimulate growth domestically, which hasn't happened for some time, as I said.
And Chris, is that credible that will actually then pull them upwards and away from this sort of spiral into deflation yet again? Because they rely on export, surely. They are an export-driven economy.
I think what we'll see going forward is further conjecture surrounding the Ministry of Finance, Bank of Japan, to actually change to put pressure on the yen. You know, the yen's going to have the ultimate safe haven tag going forward in times of adversity, and they know that. So by default, the Japanese economy is very much reliant and contingent on the rest of the world.